Hi friends, Rupee making new low and stock market making new highs. What do you think? Will it sustain? There is a lot of negative talks about if Rupee will keep on depreciating, stock market will fall or there will be panic selling, etc. etc. Let us understand historically Rupee movement and market movement. Is there any correlation? Yes, no, and how we can take advantage out of it. So give you some proper facts. In August 2013 till October 2013, in 3 months, Rupee had depreciated from 58 to 69. This was massive 10 rupees amounting to 17%. And guess what? What happened to NIFTY? NIFTY was just up by 2%. Second example, from August 2011 to December 2011, Rupee depreciated from 44 to 54. 10 rupiah, 10 rupees. And guess what? What happened to stock market? Market was down by only 12%. So at times, so there is no correlation between Rupee movement and NIFTY or SENSEX. So there are many instances in the past wherein at times there is correlation and many times there is no correlation found. So per se the fear that is created that Rupee is touching new high 71 and maybe it can go up to 73 etc., that per se is not going to change the stock market, or because of that reason market is not going to fall. So that is the short point that we would like to make, that don't be fearful just because Rupee is depreciating or Rupee is making new lows. So there could be other reasons, there will be other reasons which can turn the stock market, but Rupee will not. So I think that's a short point that we would like to put forward. What are the other reasons then? So the other thing that market currently is not discounting is the trade war, and this is very genuine. So in the past also, during 2007, late in 2007, when Bear Stearns was announced bankrupt, still stock market not only in India but world over did not react. There was nominal reaction, but then it was only in January 2008 that market really assessed the grim reality, grim situation, and then the market started to fall. So there is nothing that because currently trade wars are there and market is not reacting, don't think that it will not react. Sooner or later it will, because there are underlying massive changes that will happen. Some of the corporate profitability may get impacted. Some new companies will come into play and they will make profits. So a lot of disruptions will happen. But currently stock market is not factoring that. But that does not mean that it will not factor in future. Future it can and it will. It is only a matter of time. And we think that time is near rather than far off. And therefore we advise caution. We advise caution to all our traders and investors, and since last few weeks we have been advising that it is better to if possible book profits and wait for a sharper and deeper correction which can be expected, not necessarily now but sometimes anytime before the close of this calendar year. So now by September end we will have Fed meeting and US is all set to increase, or in fact US Fed is all set to increase the interest rate by another 0.25% because their inflation is touching at higher level at 2% mark. Economy is doing great. Consumer confidence is great. So these are all the constituents, or this is anatomy wherein Fed is inclined to increase the interest rate. And when interest rate rise sooner or later, it creates an negative impact on equity market, and that is what we see, that before year and this calendar end market will correct sharply, and that will give a big opportunity for all those investors and traders. So currently what traders should do, Number one, they should ride the wave till the time market is going on. So we believe for short-term traders, 11,600 is crucial. If Nifty goes below 11,600, I think they should square off their long positions and can initiate short positions. From medium-term perspective, I think Nifty 11,000 low, when Nifty crosses below 11,400, it is time to take an exit from your from medium-term positions, because after that, I think if the market falls below 11,400, some amount of serious correction should begin, and it will take deeper before it rises. So these are the two short Lakshman Rekhas, 11,600 for short-term traders and 11,400 for some medium to long positional trades. And for investor, these are no times. They should really sit on the sidelines and really not get carried away and not be greedy to put in their money. So we have seen Reliance was the talk of the town, and see what happens to Reliance. Since last 3 days, the correction has begun, and we believe that this correction will take larger and deeper to around 1100 levels. Prior to which, then we will see how to approach Reliance. But then in our stop note also, we had pushed notification that it is time to book profits in Reliance, and indeed since last 3 days, Reliance has started to drift lower, in spite of all positive narratives, in spite everyone being bullish that Reliance can touch 1,300, 1,300, Reliance can go to 1,500. But when correction starts, people will change their tone, people will change their actions, and they will also go with the price. So better be careful in Reliance. Because of rupee depreciation, the least talked about sector is textiles. Today the market has really rewarded textile sector and prices are up, but I think that sector one can still do a short-term betting in terms of price rise. But in general, I think one has to be cautious. There is too much of optimism, and prices can really correct. But from trading point of view, when prices go below 11,400 and 11,600 for short-term traders, that's the time you should take an exit. If you have anything, please do write to us. In the meantime, enjoy Janmashtami. Happy Janmashtami to all of you. Thank you.